So with that, if less finished goods ending, that would be, the result would be your cost of goods sold. So for number one, considering that we are looking for cost of goods manufactured, the formula now would be your total manufacturing cost plus beginning balance work in process minus ending work in process. Now, in this problem, you have already the direct materials used is given, direct labor is also given, and factory overhead is also given. So total manufacturing cost will be 96,000. So you add everything, 12 plus 63 and 21. Now take note, you have here increase in work in process. So what does increase in work in process mean? It means now na if you are to compare your beginning balance and ending balance of work in process, it simply mean that dako ang imuhang ending balance. So there's an increase in the balances of your work in process. So if I'm going to have that one in a T account, so for example, this is your T account. Are you still with me?
Yes, sir.
Yes,
So you have
sir.
here your work in process. Beginning balance is 10,000. Ending balance is 21,500. So mao na ang mahitabo. So if you are to look at the balances lang, unsa may diferensya niya? How much is the difference? Okay, 11,500. So it means now na there was an increase in the balances of work in process. Considering that there's an increase in the balances of work in process, what we're going to do is you deduct this one. Okay, nabilin pa man siya. Nakuha? So if the problem tells you na decrease in work in process, what will happen now? You add. Okay, so you add. Again, if it's increased work in process, deduct. If it's decreased work in process, you add. Same procedure for increase in materials, then decrease in materials. So if it's increase in materials, materials inventory, you will deduct. If it's decrease in materials inventory, you will add. Same procedure also for your finished goods inventory. Okay. So in this case, you have here increase in work in process. So considering that this is an increase, so you'll deduct 96,000 minus 11,500, a total of 84,500 for your cost of goods manufactured. Number two. For number two, what the requirement for number two is we are to compute your ending work in process inventory. Now, if you're going to lay it down, so this will be your formula again. So you have your direct materials used, direct labor, factory overhead. Then that will give you your total manufacturing cost plus beginning minus ending. Then that will be your CGM. The problem lang here is that we are to look for this one, work in process end. So in normal methods, if you have already gone through with practical accounting 1 with Valex, he is used with this type of method, can squeeze method. So in this case, this is already given, so 15,000. Now take note, there's a decrease in materials inventory. So what happens now if there's a decrease in materials inventory? As what I have mentioned earlier, you add. So they have here direct materials used of 19,000. So 19,000 plus 40,000 plus 50,000. Total manufacturing cost of 109,000. Since you have here a work in process beginning, you have 28,000. Total goods in process is 137,000. Now, looking at the problem, we have already there the cost of goods manufactured, which is 99,000. So what amount will be in order for us to get 99,000? So therefore, this must be 38,000. So you simply have 137,000 minus 99,000, so you'll get 38,000. So that should be less. Okay. Do you follow on the method?
Yes, sir.
Question so far? Hello? Number 3. Now for number 3, it's the same again. So for number 3, you have here cost of goods sold, which is 156,000. Decrease in finished goods, 13,000. And increase in WIP of 9,000. So again, squeeze method. So pabalita, 156,000 plus minus 13,000. That will give you 143,000. Then plus 9,000, so that will give you 152,000 as your total manufacturing cost. Ako?
Copy, sir.
Okay, so again, ha,
Yes, sir.
ayaw kalimot ha. Ayaw kalibog. If it's increase in WIP, less, decrease in WIP, add. So in this case, ako lang ni gibali, considering na pagbali ang ato pagkuha sa total manufacturing cost. Ako ha. If hilig mo algebra, then I can give you the algebra equation also. Number 4. So for number 4, you take note lang of the factory burden in November, which is 75,254.50. It already states there that the factory burden daw is 50% of the direct labor cost. And the conversion cost is 50% of the total cost of manufacturing. Considering that we are to get your cost of goods manufactured, ang importante lang niya is naatay total manufacturing cost plus WIP beginning minus WIP end. Ako. So therefore, since wala pa man nakuha nato ang total manufacturing cost, let's move on first to your conversion cost. We already know that the conversion cost comprises of direct labor and factory overhead. Since wala dili given ito ang direct labor, so what we're going to do now is get it from the factor of burden. So 75,254.50 divide by 50%, or it could be 75,254.50 times 2. So your direct labor now will be 150,509. Plus the FOH, which was mentioned earlier. Conversion cost now will be 225,763.50. Now, take note that the total manufacturing cost is 50 more than twice sa conversion cost. So simply you multiply this one by 2. So we have already our total manufacturing cost of 451,527. Then add decrease in work in process. So cost of goods manufactured is 453,002 pesos. Any questions? Are you still with me?
Yes, sir. Wala like questions, sir.
Okay, let's move on to exercise 1-8. For exercise 1-8, you are required here to first complete the table. Second, you are now to answer if we are to serve and sell 45,000 cups during the month and the selling price is 16, will there be a profit? So that's the second question. The third is how much is the profit? So that's the third question. Fourth is how many cups in order for us to break even. So first is let's have the table, so which is this one. First column, you have 30,000. So yun sa man nato pagkuha ang variable cost and fixed cost na cost per cup of coffee. Simply, you have there 180,000 which is on top. Divide it by the number of units, which is 30,000. With that, it will give you 6. Then do the same with fixed cost, 300 divided by 30,000. So that will give you 10. Then so on and so forth. Okay? So as you can see, if total gatong hisgoton, constant gina fix si total fixed cost. Pero if it's cost per cup of coffee, more fixed si variable cost. What? Okay. How do I get 240,000 class? Just simply 6 times 40,000. How do I get 300,000 na variable cost? So just simply 6 times 50,000. Go on.
Yes,
So
sir.
since na naman tayo fixed cost and cost of per cup of coffee, so let's have this one. 45,000 times 16, total sales is 720,000. Then variable will be 270,000. So that's 6 here times 45,000. Then fixed cost of 300, a total of 570,000. Then less this one to your sales. That will give you your gross profit of 150,000. Okay. So, as to the second question, will they be able to operate profitability? Answer is yes. Next question is how much? So they have their 150,000. The next question here is how many cups of coffee must be served and sold per month in order to break even? When I say break even, it means na walay profit, walay loss. So exactly 0. So for you to solve that one is you simply have simple lang, fixed cost divide by unit per contribution margin. So here, we already know that there's a fixed cost of 300,000. The next question lang is how do I get your unit contribution margin per unit or contribution margin per unit? Simple. It's just the selling price per unit, which is 16, minus the 6 pesos na variable cost per unit. So that would give you 10. Okay. Then fixed cost is 300,000 divided by 10 na unit contribution margin. That will give you a break-even point of 30,000 units. Check. 30,000 units times 16, that will give you 480,000. Less variable of 150,000 180,000 and total fixed cost of 300,000. Answer will be 0. Any questions?
None so far, sir.
Sure? Any questions? Okay, problem 1-A. So this is the first question here is direct materials used. So formula here is direct materials beginning plus direct materials purchases less direct materials ending. You could also have T accounts for better understanding. So what I have here is the solution already. So direct materials used should be 3,244,800. So that's 384,000 plus 3,136,000 minus 275,200. Okay. The next question for problem 1-A is what manufacturing costs were added to work in process during 2019? We have already the direct materials used as confirmed from above, 3,244,800. You have already also you also have your direct labor, which is 2,176,000. Something direct labor, direct manufacturing labor. So your overhead now comprises of these materials, so sandpaper, materials handling, coolants and lubricants, indirect manufacturing labor, leasing cost, depreciation equipment, property taxes equipment, then fire insurance equipment, or a total of factor overhead na 1,305,600. So total manufacturing cost should be 6,726,400. Okay? Any questions so far? Yes.
Good evening, sir. Kanan, sir, ba clarification lang, sir. Sa pag-solve bitaw sa question number 2, sir, is that it's okay, sir, if we wrote down the 3 million, sir. I mean, like the composition of the direct material, sir, ba? Like nagisuwat pa namo on direct materials 384,000, sir.
It's okay. It's okay.
Okay, sir.
Number 3 is the question for number 3 is how much is the prime cost? Now take note as what we have discussed last meeting. Prime cost comprises of direct materials and direct materials used and direct labor. So in this case, you have already here the direct materials used and your direct labor. So that would be a total of 5,420,800. So number 4, what amount of conversion cost was added to production during 2019? Take note again, conversion cost comprises of direct labor and overhead. So since nanamata kini direct labor, overhead is 1,305,600. That comes from here. Okay. So total conversion cost is 3,481,600. Number 5, how much is cost of goods manufactured? We already discussed this one earlier. So total manufacturing cost of this amount plus WIP beginning balance less WIP ending balance, or a total of, or your cost of goods manufactured now will be 6,758,400. How much is the cost of goods sold in 2019? So you need now your CGM, which is your cost of goods manufactured. Add this to your finished goods beginning inventory, which is 672,000. Then less finished goods ending, 1,280,000. So your cost of goods sold is 6,150,400. Kana lang. Any questions? Hello?
Wala, sir.
Okay. I think that would be all. Ganda ni archive ko. Are you sure na wala naman question? Let's end it early. Thank you and goodbye.
Sir, na lang
Pilar?
po, sir. Will we have face-to-face next Hika Thursday, sir?
No.
Okay, sir. Thank you.
I'll have to decide whether synchronous or asynchronous.
I'll copy, sir. Thank you.